Well, hello everybody, and welcome to today's very special Lunch and Learn series. We are going through a topic today that is pretty darn hot in 2019. We're talking about precious metals. Precious metals including gold, silver, palladium, and platinum. So we have a really exciting day today lined up. We're going to go ahead and get started right away to respect your time. This is, again, a Lunch and Learn series designed to last about 30 minutes, but then we'll leave the last half of the hour for Q&A. So if you have any questions for Tom or myself, but especially for Tom, because we're going to be talking about many different things, and Tom has a wealth of experience here in the precious metal space, go ahead and type those questions in as you think of them. And then when we get to the question and answer session, we'll have those ready and we can begin going through those. First, I'll introduce myself. My name is Jerry Robinson. For those of you who are new or unfamiliar with followthemoney.com, I'm an economist by trade. I'm also a trader, and I'm an investor, author of a book called Bankruptcy of Our Nation, which is really about the insidious nature of America's monetary system. And I'm also a coach. I help many people around the world when it comes to investing and trading. It's a joy and an honor and a privilege to do what I do here at followthemoney.com. That's where you can learn more about myself and all of our work. And I'm very pleased to be joined today by another gentleman that you've probably seen and heard on YouTube and also right there on followthemoney.com. His name is Tom Cloud. He is a veteran precious metals advisor. He has been in the precious metals business since the 1970s. He's seen a lot of changes over the years, certainly been through many bull markets and many bear markets. And you can subscribe to our YouTube channel, youtube.com/FTM Daily, and you can get his weekly, or actually they're bi-weekly updates now on video. So be sure to do that. Tom, you are on the line. I want to welcome you here and thanks for being here today.
It's great to be back, Jerry. Always enjoying helping people get educated on precious metals. There's so many bad things out there. We try to separate the bad from the good and give people the best information we can.
You certainly do. We get lots of great feedback from your videos and from the information that you're putting out. So today we're talking about precious metals. It's an investment outlook today. So what we're going to be really doing is drilling down deep into the charts. We're going to be looking at gold, silver, palladium, and platinum, all four of these metals known as precious metals. And we're going to just take a look and see where they currently are, and based upon current fundamentals, what we might be able to gather about what's going to be ahead in the future. Now, before we dive into those charts, I do want to show you that all four of these metals that we're going to be talking about today, we have already called uptrends on. Now, so those of you not familiar with followthemoney.com, what we do for our members is we provide uptrend and downtrend alerts. In addition to many other services, one of the primary services we offer is trend research. And so each of these precious metals are tracked by our website. We track each of these precious metals, and when they enter an uptrend, that is, they begin to move higher, they suddenly begin to form something on the chart that indicates that they have momentum and they're moving higher, we detect that and we alert our members. And so you can see here on the screen that palladium, we called an uptrend on back September 21st of 2018. And this is the palladium ETF, PALL. And since that time, palladium has gone up about 58%. So that's been a really nice uptrend. Palladium has really done well. Silver, we also called a new uptrend on back in July, a position uptrend. You'll see it's up about 15% since that time. Gold, we called a new uptrend on in June. That's up about 13%. And platinum, we also called an uptrend on back in July, and that one is up about 5%. So we have two different types of model portfolios that we track these different ETFs with. So this is our position uptrend. So this is for position traders. For longer term investors, if you're a long-term investor and say, look, I just want to buy whenever the metal or some particular commodity enters into a new uptrend, I just want to be alerted. Well, that's our long-term uptrend model portfolio. And there you can see that we've had palladium actually in an uptrend long-term since 2016. And that one's up about 154%. Very fine return on palladium. It's been very hot. We called a new long-term uptrend on gold. This is the big daddy. When you get a long-term uptrend in anything, it's pretty big. It's kind of like the Titanic. These don't happen very often. So we did alert our members to a brand new long-term uptrend in February. Since that time, gold is certainly net positive. Silver, we called a new long-term uptrend finally in August of this year, and it's up slightly, modestly. And then platinum, we called a new long-term uptrend for the first time in a very long time. We've begun to see platinum kind of shake off some of that bearish sentiment and begin to move higher. And it's still down a little bit from its long-term uptrend, but it still technically looks good on the charts, as we will see as we move into this presentation. So all of four metals are currently in uptrends according to our system, according to our trading system. So what we want to do now is we want to go through each one of these metals with Tom Cloud and take a look at the charts together and get Tom's comments on what's driving the current price action in each of these metals. So let's begin with physical gold. And here we have a chart of physical gold, and there you'll see our new uptrend alerts issued on February 1st and also on July the 7th. Tom, we see that, as you can see on this chart, Tom, we had that nice breakout on gold above the 200-day moving average, which is always a really important technical area. It rallied higher, and then it has not come back below that area since breaking out back in December of last year. It just recently breached below the 50-day moving average just recently, just over the last week. And we've since seen it kind of rally back higher. So, Tom, I would imagine right now you're getting lots of questions. You certainly alluded to this in some of the videos you've done, but you're probably getting lots of questions about, is this uptrend over? Or is this, is it time to sell? Or should they add now? Or should they wait for a bigger pullback? I'm sure you're getting lots of questions about gold. Tell us about some of the questions you're receiving and how you're answering them.
Well, the seesaw is what you're talking about, Jerry. But I really appreciate your trend analysis because we feel the same way. The trend is up on all the metals. It doesn't mean they're not going to jump around. I was telling you earlier about a client that got all upset that gold went down to 1456 last week right after he bought. He said, will it ever get back to 1500? Here it's back to 1505 today, 3 trading days later. But what makes this different than the bull market? The first year I was in business in the 70s, 1976, when I started this company, and we saw gold sitting at 77 and went up to over 800 in 3 years. We're seeing some of the kind of same plays, but what makes this so different is the central banks. I cannot even begin to spend time and tell you stories about what's going on with the central banks that are realizing that the answer to any monetary problem in the future is going to be gold, because it's the only thing that trades in all 28 world markets. It's the only thing that you can take into anywhere in the world, and they know that gold has a value, a identifiable value. But what people have underplayed, and the ones that have missed this 17% move in gold this year, is, I've said it many times on the YouTube, is do what the central banks do. You know exactly what the reason they're buying it is, because they don't trust their own paper money. They understand, they don't build these skyscrapers in Charlotte, North Carolina, Bank of America on loaning you money for a house at 3.5%. That's not how they're built. They're built on leverage. They're built with paper money, or play money, as you may want to call it. And that's how these banks get so big. It's not loaning or you having your checking account there. It's what they do with your checking account. So what you got to realize right now is the central banks, they don't care. They're not looking at cotton numbers every Friday. They're not even looking at charts. Some of them may be. But what I'm telling you right now is this is the biggest trend. And Jerry and I talked about some timers. I'm not going to mention any of them. If you want to call and talk to me, I don't mind talking, but not on here. I don't want to throw anybody's name out there. But 2 of the guys that absolutely have been bears have gone so bullish, overwhelming the last week when gold got back down to 1450. They've just jumped on, and they think this move's going to be huge. But they also know a lot about what the central banks are doing, and especially now with us talking about negative interest rates. I mean, just think in Germany, clients are willing to pay the bank 1.5% just to sit on their money. I mean, I can't think of anything more ridiculous myself, because anybody give you negative rates, I mean, there's something wrong with the economy. You want to profit from silver and things like that, gold and silver. So anyway, Jerry, that's the first thing I'd say is do what the big boys are doing. They're not putting billions of dollars every month. This year in 2019, they'll break an all-time record in the middle of October from any year in history. There has been one central bank in the world sell 1 ounce of gold since 2014. So this thing is getting big, and it's a trend you can jump on, and you keep following the work that Jerry's doing. You keep looking for uptrends and downtrends, but get in the market with part of your assets.
Taking a look here at the screen, we have a chart here of gold prices in Canadian dollars, and you'll notice that the breakout on this occurred, Tom, and I have a question about this, but you'll notice here at the end of May, we really begun to see a breakout, and this is really when everything began to happen. We began to see a breakout, and not just the Canadian dollar, but we see here in the U.S. dollar, that breakout comes the same time, just right there at the very beginning of June, and that's whenever gold prices took off and did not look back, and they began that new uptrend. Here you see it in euros. The same time, at the very end of May, we saw that nice breakout, and it's just really continued higher. We can even take a look not just at euros, but also the yen. That breakout comes at the same exact time, right here at the end of May, and it began to run higher. And we take a look also at the Chinese yuan. We see the same exact moment. Right here at the end of May, that breakout happens, and we begin to move higher. And we're kind of moving higher, and then we're kind of consolidating those gains, and then we're moving higher and then consolidating those gains. That's very reminiscent of how previous uptrends in gold have worked. So I don't know if you have something specific to say, Tom, about what happened at the end of May. Well, yeah. Let us know. I mean, what exactly? Well,
Jerry, there's a name of it. I can't think of it, but what is happening, plain and simple? If you went back and took these charts on all these different currencies that you have, and let's say the dollar gets beat, it goes down from 100 to 90 in the world index, so it had a 10% drop, say. So what happens is, gold goes up, but in the countries that are the winning, let's say the euro or the yuan, where their currency is the one that beats the U.S. dollar 8 or 10%, you see theirs going down in their currency because the metal becomes more expensive, and they go through what I go through all day, every day, talking to people and trying to combine. Well, and what this makes so unique that you've just shown is for us guys who've been in this business 40 plus years, it means one thing to us, and I've already alluded. It means there is purchasing no matter what. No matter what. It's not pegged to dollar trading, currency trading. There is a tremendous tonnage of gold being sold, and people are not timing it in euros or yuan or Canadian dollars. They are buying the gold because they know why they need it and where it's going to go and where the world economy is going to go in the next few years, and how these currencies and the fiat currency game is possibly going to end a lot sooner than most people listening will believe. So when you see something like this is a 40-year move for someone like us old guys who've been around this business. We look at it and we know what it means. You can't make heads or tails when you're trying to look at it from a purely technical thing if you don't know why is it going up, because people aren't looking to see if that currency, they're buying gold. They want ounces and tons of gold to have there because they know what it's going to be worth in a few years. So I think, Jerry, this is the most interesting thing you put up. I mean, this is really, really good stuff.
I think the Federal Reserve, which has been suddenly cutting rates in 2019, whereas up until the end of 2018, there was a lot of bluster about how the Federal Reserve was going to continue its aggressive tightening campaign. They planned on raising rates at least twice in 2019. That never happened. That never materialized. Instead, the Fed had to reverse course, do a big U-turn, and suddenly then begin cutting rates. And this, of course, Tom, is coming at a time when the economy is supposedly, if you ask people on the street, if you ask the average individual, according to polls that we see, they think that the economy is doing very well. That's the perception that's going on right now. But in reality, you're talking about central banks buying gold. We see gold breaking out. We see the Fed saying that they can't raise rates because the economy is too fragile. And then when you look at the actual interest rate the Fed has at present, I mean, we're talking what, a mere max 2%. I mean, that's just stunningly low. And it sounds like the Fed is going to continue to cut rates. What does that mean for gold?
Well, I mean, I think gold's going to continue to go up. People are not going to take negative rates. If you're going to go out there and buy a bond at 1%, you can sell your zero coupon bonds now for 3% maturity in 3 years. There are people out there afraid to put their money anywhere except in a money market or thing. But the ones that are buying see the opportunity because they either realize they are going to have a negative interest rate or a very small plus interest rate, and they're willing to come in and take that chance. And I think it's been seen on these graphs exactly tell the story on that. You've just seen no matter what currency you're in, and like I said, when these banks really panic, when these central banks really panic, and you're going to see these purchases go even bigger than they've ever gone. We've had 4 straight years where they bought more, but now it's getting into huge numbers. I was telling you earlier, Jerry, a mutual client and friend of ours, talking about same thing. You're just seeing it all over the world. He sees it in Singapore, where premiums are higher than anywhere in the world, because that's where most of the central bank purchasing is being done, and the tonnage and the kind of gold that they have to buy. They can't just buy anything. They can, but there are certain things to be a Basel #1 tier investment where your gold counts dollar for dollar, where if a central bank owns real estate, they can only count it as 50% of appraised value because of the risk in it. But yet gold is no different than a treasury bill or a treasury bond. It's a tier 1 investment. So that's the reason these central banks buy it, because they want to keep their balance sheets for their investors looking good. And it all has come our way. That's the reason you're seeing that. And we'll get to silver in a minute, but that's the main thing in gold right now. Central bank, central bank, central bank.
Moving on to silver, as you had mentioned, silver is probably one of the most exciting opportunities, I think, that in many investors' minds. Silver has had this tremendous history of outperforming gold in the big bull market rallies. We think back to the 1980s. We even think back to the early 2000s when we had this breakout. Gold is exciting. Gold is money. Central bankers understand that gold is, something real, and they buy it. But silver has been called the poor man's gold. If you can't afford a bar of silver, you can always afford a bar of. If you can't afford a bar of gold, you can always afford a bar of silver. And silver has many of the same properties. It's been viewed as a monetary metal throughout history. It has a lot of the same finite features as gold, although somewhat different. But silver has been really attractive, and many people have been talking about how silver may have much more upside in this new rally than gold. And we have some charts here I'll throw up on the screen. But Tom, we're noticing about the same thing here on the charts. I want to point that out, that toward the end of May, we kind of bottomed out in this recent pullback, and then we burst right above that 200-day moving average again, which is a really key technical area, and we held it after pulling back to it. And in July, it just took off, and it has not looked back since. We did, again, fall below the 50-day moving average, which is a important area of support in any uptrend, but we appear to be retaking it now as we got some pretty poor, soft manufacturing activity data that came out just recently. We saw that manufacturing activity here in the United States has plummeted to a decade low. Now, isn't that concerning for silver, Tom? If the global economy slows down, we would say that would probably be bullish for gold. but wouldn't silver suffer if the global economy itself is contracting?
Yeah, silver, that's the reason it's a lot more volatile, where we could call it monetary metal back before 1964 when the dimes and quarters and half dollars, but it's not like that now. Silver is truly an industrial metal, and it, they love to see it come down. But what happens, while all of us know exactly what you said, that silver has more leverage, when it goes, it usually goes bigger percentage up than gold. But what is changing this time, and I just don't see the volatility in silver that we've seen throughout the 40 years I've been in it. We got an executive client at Florida Power, and just to see the amount of silver that Florida Power company's buying for the panels, the solar panels, they're changing. Even though they're advertising on TV today, I live in South Georgia, but we get Jacksonville TV. They're advertising and showing that for the next decade, they're into providing their power growth and needs with solar panels, which take silver. And then you've got a country like China with 1.3 billion people, and they're mandated to have electric cars by 2024 or pay a big penalty. And of course, we're seeing the same thing in California, where you have to have solar panels now on houses of certain sizes. So we're getting demand, Jerry, from places we've never had it, and all these ups and downs. And what's going to happen when this thing goes, like the ratio now is about 86 to 1. I think you even have a graph of it in a few minutes, but it got down to 16 to 1 when silver went to 50 and gold went to 800. It was a 16 to 1 ratio. Now, most of the time it's been between 36 and 50, but it shows you what can happen when this moves, because let me tell you, can you imagine what the cost of power is going to go up if the cost of silver doubles or triples, or the electric cars they're making around the world? And silver is still, by the geologist says, it is the first major mineral or metal that'll be depleted from the Earth's crust. And it'll happen in the next 4 years. There'll be no more silver in the ground. I mean, here and there, but no big deposits. So people really have, we're selling a lot of grandparents' silver, as corny as it sounds, that they're putting away for their grandkids and saying, don't touch this, for the next 10 years, and it could be up 5, 10, 20 times. So it's a different world, Jerry, in silver than it's ever been. It really is. And the investors, the only key to this thing is the ones that are still technical traders being there and keeping it somewhat, on a seesaw. But the seesaw is very favored to the uptrend.
You've brought up a lot of great points. I just want to reiterate and then ask you a question. So the first thing I wanted to comment on was that many people aren't aware about how dependent solar panels are upon physical silver. So there's a great demand there. The electrical vehicles as well that are becoming popular, that's going to put, again, a demand strain upon physical silver that many people don't think about. Another thing is that if you're a long-term silver investor, that $14 area of support, we call it $13.90 to be technical, but around $13.90 to $14 is really the key area of support. But we have run into some issues at the 1850 resistance area. We poked our heads right above it on pretty big volume, but then we came right back down below it. So 1850, technically speaking, is a really important level on silver. But Tom, let me ask you this. This gold silver ratio, for those who aren't familiar with this 85, it says 85 is what the gold silver ratio is. Does that mean that you can take a bar of gold and trade it for 85 ounces of silver? Is that what that means? Is that what that number means? And what does it mean? What does it mean that it's at 85? Historically speaking, you had said that it had been down lower. Does this bode well for silver as we move forward, or does this?
It's come from 93 back to 85 in the last month. So silver's done I mean, I think gold's up like 4%, silver's up like 5%, like an extra 10 or 15% above what gold's gone up. So we're starting to see this thing go that direction from 93 back to 85. And, you know, you can make a case for it being a 16 to 1 or 32 to 1 or 50 to 1. There's all those are out there. Every one of those ratios are out there that we've had. But if you look at the ones that spent the most time, it's going back to 1971 when Nixon freed it and gold was pegged there at $42 and silver was $2. It was, you know, like a 16 to 1 ratio when it was like below $2. So you had that. You had the $50 silver and $800 gold I talked about, where gold per ounce was 16 times more valuable than gold. Right now is 85 times more valuable than silver. So it just makes sense when you got a depleting metal that's being depleted faster than any other metal in the Earth's crust. All these new ways to purchase through the cars and the solar panels. But once again, the key is going to be you, the investor I'm talking to, that enters the market for a mid to long-term hold. That's when the shenanigans on the commitment of traders stops, because they'll still peek in there when there's a good run on silver and push it down or try to push it down. And there'll be a time in the next 2 or 3 years, I don't think they'll be able to push it down, and that's when we get, you know, silver goes to 40, 60, 80 instead of, you know, 1750 where it is right now.
You know, that's a topic you've brought up that we don't have time to get into, but it sure would be fascinating to talk about that. We can save that for another day, but there has been so much manipulation in the physical markets, and not just in silver and gold, but almost any physical market you can think of. The Wall Street banks love to manipulate, and that's really been something. And they've been kind of getting called on that recently, although we've seen that story before. I sure hope that that could be resolved at some point. Let's keep moving on. And I want to remind all of our visitors today, our viewers today, thankful to have you here. And we want you to be able to ask your questions. So you may have a question about gold or silver, palladium, platinum, the gold-silver ratio, some other topic. Feel free to type that in, and we will get to those questions here toward the end of the call. Let's move on to palladium, Tom. Palladium has been our shining star pretty much since 2016. Whenever gold, silver, and even platinum kind of had a tough time, palladium just kept chugging higher. What is behind this big uptrend that just keeps on moving in palladium, and where do you think it ends, and what's driving it, and what could bring it to an end?
Well, what could bring it to the end would be going back between the trade of platinum and palladium for, you know, a clean air bill going back to 1980, 81. You can use, these two metals are interchangeable. They have a different melting point. So if a car manufacturer is going to retool, they need to buy quantities of platinum or palladium. We've seen palladium go to 1,000, and then I moved people over to platinum. This is like about 9 years ago, and palladium went all the way to 360, and platinum went to 2,100. And then they changed places, which they've done about 4 or 5 times since I've been in this business. And palladium right now, what's keeping it going has been the car industry growth around the world, and some people aren't willing to retool their company. Either they don't think it's going to continue, or they don't have time, or don't have the extra money, whatever it is. But palladium is very scary to me right now, and as people have called and asked me, I'm pretty much out of it myself, because I put it over in platinum, and I may have been a little early, but this is one of those things you'd rather be 2 or 3 months early than 2 or 3 weeks late, because when the change become evident around the world that people are selling palladium to buy platinum for the catalytic converter, it's going to move. And the second thing is Russia, Siberia, is a very, very cold area, one of the coldest on the planet. And that's where 88 to 90% of the palladium is mined, and most after that, South Africa. So they only open 6-7 months out of the year to mine, and then the Russian government is the owner of all that palladium, and they play all kinds of games with it in the futures market, and it looks rigged. I mean, with it going up, you talk about being rigged going down, Jerry. This is one that people in the business feel is rigged to go up because of the Russian government plays such a substantial part in the price of this, because the stockpiles they keep and sell when they act like there's a big shortage, and they sell it. But just continue to watch the volatility in it. But when you are sure there's a switch between platinum and palladium, they get closer together. I mean, right now they're 2.5 times, well, a little over 2 times difference, palladium being twice as valuable. And remember, as I told you, 8 or 10 years ago, platinum was double the price of palladium. So
Yeah,
I think
and
it's coming
Tom,
back.
and Tom,
Yeah.
let me ask you about that, because that seems to be unusual. I mean, you go back through time, platinum has traditionally been more valuable, or at least more expensive, than palladium and gold, right? Hasn't platinum
And
typically
gold.
been? Yeah,
And platinum's
typically been the
36
case.
times more rare than gold known to exist. 36 times more rare.
Let's go ahead and move
Right.
into platinum, because platinum, as you
Yeah.
mentioned, is something that you have gotten aggressively along on, and you've even issued your own buy alerts on platinum. Platinum does. Let's just look at the charts quickly, and then I'll have you comment. We have certainly seen platinum kind of recover. We see it now currently at just above that key $750 to $800 support. That's where we came back to in the 2008 crisis, and then it ran right back higher. But we now find ourselves in this kind of descending triangular pattern. A breakout above 1100 would really be bullish, technically speaking. But we can see that we have that strong support here at around 750 to 800. And we've also noticed a really strong increase in volume, just continuing to intensify each and every year. It just seems to get more and more demand. And then we have another chart here. This is the 6-month chart. And we can see that palladium has recently broken out above its own 200-day moving average after kind of scooting below it. It retook it and then came back and tested it here, and that was bullish. And so it took off from there, big volume that came in. Since that time, along with the other metals, it's just recently this week slipped below its 50-day moving average, and now is kind of fighting right at that. Lots of volume since August. We've seen a lot of big volume coming in and a little bit coming out. So again, kind of fill us in again on your thesis on platinum and why you think it could be going higher.
Well, I've touched on it, but certainly if there's a change between platinum and palladium for catalytic converter, and yet a lot of it's moving toward electric cars and silver, but still, as long as they're making cars that need clean air or the catalytic converter, these are the two metals you're going to see. So it's just really trying to pick when to switch from one to the other. And as I said earlier, I would do it sooner than later. I think platinum has a much bigger upside than palladium does from where it is. So I think you got to look at that. And once again, Russia doesn't control the percentage of platinum they do of palladium. Platinum's more spread out around the world. Even America has, and North America has quite a bit of platinum. So I just feel it's a play. Certainly, those that have made 3 to 5 times their money in palladium. We got one of our clients in California make 5 times on it and just sold out at 1566 recently. But it was a 5-bagger for him from 2008 up to 2019. So in 11 years, it went up 5 times. So I just think it's a smart diversification move to sit here and try to paint all the other pictures of platinum. The windows in Alaska now have been the best they've ever been. They've dripped platinum into these windows that give them the highest ratings in the world in these real cold climates. And that demand's going to continue to pick up. But things like that are not in the news all the time. What's in the news is the catalytic converter.
Let's move into question time here, and I want to make time for our viewers to be able to ask you their questions. I'm going to start with my own, Tom. And if you have a question, by the way, if you're listening today and you have a question for Tom, feel free to type those in now. It'd be a great time to do that. I see we already have several questions we'll get to in just a moment. Tom, my initial question for you is just to go ahead, and I know this is kind of an exercise in futility, but you have been in the business for 4 decades, so I think your opinion would certainly be informed. Whenever you look at the price of gold, silver, palladium, and platinum, let's just go through them briefly for a minute, one at a time. What do you think? And again, exercise and futility, and also I don't typically believe in forecasting prices. Who knows where prices are going to go? But again, you've been in the business. You would have a better guess than anybody that I would know. If we were to see gold really continue this uptrend, what price do you think gold could realistically get to? The same question goes for silver. So gold and silver specifically, what prices do you think we might see prices top out at? What's your top end on a forecast?
Well, there's 2 answers. One is if it's just everything stays like it is. I'm talking about laws and people accept. If you look at our debt situation in this country, and I'm not going to spend a lot of time except to say we've got under Trump debt going up faster than anybody in history. There's no comparison. He's printing money at rates that are incredible. So if you look at it from an investment standpoint, the value of the dollar and other currencies around the world, I think you can see it get up to 2,600 to 3,000 before the world would say something has to be done, and that's when all these central banks are holding gold are going to, celebrate. Now, the other school of thought, and let me say, 2 of the sharpest people I know in this business work out of Singapore, and they are saying there's positively, unequivocally, going to be a reset in this world. It's already agreed on in G20 meetings, and that's what they claim. How they know this, I don't know, but they're talking about anywhere between 8,000 and 12,000 for a reset, and these are not crazy people. Let me promise you, these are people that I talk to frequently. They're some of the top people in the world. So if I look at it from what I know, I'll say 3,000. If I look at it from what they're looking at and what they believe, 8,000 to 12,000 on the gold. The silver is interesting because if you come in and say it's already been to 50, or right at it 48 or 9 twice, and it was going to go up, double where it's ever been, like gold going from 18 3,600, which a lot of people is another number people use. It'll double what the highest gold price in history is. Well, if you double silver, has been around 50, you're talking about 100. I feel very comfortable. I've watched platinum, palladium, rhodium we don't talk about anymore, go up, 15 times, 10 times, and my clients take advantage of it. I see because of the lack of silver coming, this is going to be the biggest number. It's going to be when it got off the bottom at $14. I saw people talking about a 10-bagger going to $140 an ounce. And even if you give that a haircut and come down to 80 or 90, I absolutely think there's not any chance it's not going to get to 80 or 90. Now, when you start talking about fixing silver, there's not a place to fix it. The central banks are not involved. So silver will have the volatility, but if it gets wiped out in the ground, just imagine what it's going to be worth for industrial use. And then you, just listen to this, pick your own number, because it's not as predictable as what gold would do, because it could go to 600 an ounce. And I promise you, it wouldn't shock me a bit with all the paper money afloat in the world, all the debt. I mean, it wouldn't faze me to see it 500, 600 an ounce. But I'm not predicting that. I'm not predicting it, but I'm not saying it's out either. But there won't be the G20 talking about silver.
Thank you, Tom. I appreciate that. Let's move to our Viewer questions now. We have many coming in. I appreciate that. And again, if you have any questions, feel free to type those in. We're going to try to get to everybody's questions today. First one comes from Samuel. Hey, Samuel, great to have you here. Samuel says, Tom, what do you think of the silver to gold arbitrage when the ratio moves to more historical levels? In other words, using that gold to silver ratio to kind of time your buys and sells. What do you think about it?
Well, we have a lot of people doing that. Some of our, I don't think it's for the 10,000 or 20,000 investor. I think they need to hold on and, preserve their wealth. But certainly we have people, and when we set up the lowest storage rate in the world, Jerry, and you were a part of it, and I gave you a call back in 2015 and told you I'd cut the best deal ever cut in the history of precious metals to get the low storage rate. So we have a lot of clients that leave it there, and then when they want to sell it, all they got to do is sign a piece of paper. They want to arbitrage, but they want to do it physically, not by contract. It adds another layer of safety. So while I'll be very honest with you, Samuel, I don't do it myself. It's not because I couldn't, but if I'm going to be of service to, to Jerry and people like you, I don't have time. I buy mine on trends and hold it. But certainly I can name quite a few of our large clients that do put it there and then they sign it and sell it and then they buy it back later. So it is very prevalent out there.
Our next question comes from Brian. Hey, Brian, great to have you here today. Brian says, what % of our net worth do you think should be in precious metals? Tom, let me just jump in real quickly and just make a quick comment on that. We do teach the importance of diversification here at Follow the Money. We do believe that most people are wildly underexposed, at least from our estimation, from whenever I've coached individuals and talked to them, even whenever I was a financial advisor many years ago. I found that most people didn't have any exposure to precious metals. So having 1 or 2% is really kind of an unusual thing. Personally, I have about 15% of my total investable assets exposed to precious metals, and that's pretty sizable. I mean, some people would say that's pretty heavy. Tom, you may even have more than that because this is your business. I mean, this is what you know the best.
No, I have a lot more than 15%. Yeah, but Samuel or Brian shouldn't, but I certainly do because I don't trust a lot of other stuff. But to answer Brian's question is I have had the privilege for 40 years to work with financial advisors. I'm talking about even big firms, and when they advise, usually they don't because they can't make a management fee if their client buys physical gold or silver. So they put them into an ETF where they can keep it under the management. But the storage fees on the ETF are 2.5 times what I can set up for you individually. But the most common number we see among financial advisors is 10 to 15%. We work with independent financial planners that are a little more aggressive. They're people that believe the dollar is going to go to oblivion eventually, too much printing money, and they'll be recommend up to 25 and even up to a third. But I would feel safe, like Jerry said, telling you 20% of your investable net worth in precious metals.
Before we move on to the next question, I want to let you know that if you want to talk to Tom directly over the phone, he's available. You can talk to Tom. You can ask him your questions yourself. You can call him at 800-247-2812. Tom, here's a picture of you at the 2018 Follow the Money Summit. We had a good time there in Northwest Arkansas. That was a fun time. But so you can call Tom if you have any questions, 800-247-2812. If you'd like to talk to him directly about any personal topics. But let's move on with more questions here. We have another question from Jesus. Jesus, great to have you, my friend. Hello, Tom. Would you recommend buying gold, physical gold and silver, over gold and silver ETFs?
Well, I think I've answered that. For me, if you read the back of ETFs disclaimer, you can't ever take physical gold unless you've got 183 equivalent to 183 ounces. So what's going to happen is if gold ever explodes, they have the right to say they can't get the metal and they're just going to send you the money and take advantage of all the profit. I just, because it is a smaller percent of your net worth, I definitely am a physical and not just because I sell it. That you ask me a question, I'm gonna give you an honest answer. But ETFs are better than nothing. But right now, one of the things Jerry was shocked over is when I showed that I can get you a private storage account for literally 40% of what you're paying for storage in an ETF.
Yeah.
If you look on the back and you see what they're paying, it's 2.5 times what I can get you, because I don't take a markup. These ETFs, take a markup, a management fee on the storage, all kinds of things. It just doesn't sit well with me. So I would stay with the physical metals. If you want to arbitrage it, we'll help you set up an account. We can tell you those low rates. If you call our office, we're just not allowed to mention them on the internet.
Tom, I think you would agree with this. I'll throw this in. But from my perspective, the way I approach this question is that whenever I buy for long-term holdings, I want physical. There's no question about it. I don't want anything else but physical. But if I'm taking advantage of a 2 to 3 week trend or a swing trend or a quick, I'm just going to use the ETF because it's just for a quick trade. So a trader, ETFs make sense. But if you're a buyer, if this is because you want to protect yourself from an out of control government, an out of control economy, a fiat currency system, then physical is what you have. Like they say, if you don't hold it, you don't own it. Let's keep moving on here with Andrew's question. Andrew has a great question. Hey, Andrew. He says, this is a great question. Do common consumers, does the average everyday consumer need to hold physical platinum or palladium, or is it better to trade the ETFs on trends? In other words, he says, is there any real reason to hold physical platinum and palladium? Should people hold that?
Well, if you believe like I do that platinum is 36 times more rare than gold, and right now the premium on platinum is all the metals what I have to pay over spot to buy any metals. Platinum has the biggest premium by far. It is really disappearing. The big plate, all the easy platinum has just about been taken. And just like you said, Jerry, if you're going to be a swing trader, use the ETF. But the long-term investor and the one that's buying it to diversify, maybe puts 20% of his assets into metals and maybe picks 5% of it into platinum. But I like the physical platinum. And the other thing is when these big companies have to have COMEX brand platinum to put up for trades where they can leverage it in the futures market, I would buy bars. If you're going to buy platinum, you want 1 ounce or 10 ounce bars, because the people that are playing these swing trades from a contract position in futures have to put up per delivery physical platinum. And it has been affecting the premium. This big move Jerry just showed you, not in price, but in demand. So I would stick with the physical. Of everything we've talked about, all the metals, that would be the one I would have to hold personally. I mean, I hold all of them, but that one especially.
You're referring to platinum there, Tom?
Yes, I'm referring to platinum.
Yeah. Before we continue with questions, we have many more coming in. I want to remind you that you can get Tom Cloud's bi-weekly update on our YouTube channel. It just comes right into your subscriptions. Just go to youtube.com/FTM Daily. Click the subscribe button if you're not already subscribed, and you'll get his bi-weekly analysis, and he answers questions there. It's just a great video. He's been doing that for many years for Follow the Money. Thank you, Tom, for that. I know the folks really appreciate those updates. You work hard on those each and every 2 times a month now, and we really appreciate it. Let's keep moving on here. We have another question from Sanji Kumar. He says, Tom, would you buy before or after Brexit, or just whenever you can? Thanks. So what role does Brexit play into your thinking here with gold and silver?
Well, Brexit, what it looks like, I was over there in August. What it looks like is you talk to one person, it's going to happen. Somebody else says it's not going to happen. But I think they seem pretty sure that it is going to happen. So that point, you will see more gold bought, because they're going to be on an island out there. Of course, they've had the sterling pound out there by themselves, but they're going to find out a lot of other services they've piggybacked off of that. It's not going to be there. So I really don't think it's when you buy it, but I can tell you the Europe where we bought millions of dollars and millions of dollars of British sovereigns and Swiss francs and French franc, all gold coins, and brought back over the last 35, 40 years. We just can't find them over there. They're getting, because they're buying them, not just in England, but all over Europe. They were on a hiatus from metals for quite a few years, but now they're another entity that's putting pressure on the physical market in that part of the world. So I don't think it really matters when you do it. It's not going to be a significant input to price either way.
Let's keep moving along with our questions. Good questions coming in here. Thank you, folks. Moving on to Brian has another question, really good question here. He says, this is very specific, Tom. He says, currently we have about 170 troy ounces of silver for each ounce of gold that we own. Your thoughts on that?
Well, I mean, the ratio, there's no ratio in the sand that you have to do. It's a lot of times it's age. A lot of times, if I've got a guy in his 30s or 40s or early 50s, if it takes 3 or 4 years longer than I think, it's not going to affect him. I think when you get the guys up, 65, 70, 75, 80, they're going to have a bigger percentage of their metals in gold. I mean, I see it every day. People I've dealt with for 20, 30, 40 years, the older they get, the bigger percentage of, let's say they had 20% of their assets and that was $400,000, they may have 60, 65% in gold because of the central banks and so forth and so on. So I think the younger you are, the longer employment career you have ahead of you, the more aggressive you can be in buying silver especially.
We have another question here from, let me see here. It is from Chris. Chris, thank you for attending today. Chris asks a simple question. Tom, what about owning mining stocks? What's your view on mining stocks? Do you like them?
Well, you and I talked about this when I was out, and you had that Jay Taylor, who's expert in that area that works with y'all on consulting basis. When you do it like he does it, I can see it. But unfortunately, back in the 80s, 1980s, and early 90s, I was on boards of 2 mining companies, and I got to just be honest and say I can't stand the way they give themselves raises and country club memberships at the expense of the holder. Now, certainly, some of that's cleaned out over the years.
Yeah,
there's not as much of that going on as there used to be. But I would just refer that back to Jerry and Jay Taylor because I don't spend any time. I wouldn't be the one to answer that. I do own some gold stocks, but it's a very small part of my portfolio.
Yeah, that's interesting. I think that's kind of the question is, so you do own some, but it's not a big part. Even though you know about gold and silver, you're more attracted to the physical, not to the mining stocks.
That's correct.
Yeah, that's a really good. That's an interesting answer. Great question. Yeah, I would add to that that we do track the gold mining ETF, which Tolbert has asked about, GDX. We also track the silver mining ETF, SIL. Those are composed of a basket of gold and silver mining stocks. And then we also have our Smart Score rankings here at Follow the Money for our members. And so if you go to followthemoney.com/Smart Score, our members there can see all of the gold and silver mining stocks ranked according to our proprietary Smart Score system. And some of the top mining stocks that we have been following on the gold side would be Kirkland Lake. That's actually number 1 on our Smart Score ranking. Also, Rand Gold is up there, but Royal Gold is another one we really like personally. When it comes to the silver side, we've consistently been seeing Pan American Silver near the top of our Smart Score rankings, PAAS. Also, First Majestic has been up there. I see Samuel had asked about that. So we kind of covered some of the topics there about mining stocks. I want to make a quick comment here that if you'd like to download our free gold investors kit and also have Tom shoot you an email occasionally. Tom puts out email alerts on occasion whenever he sees something important that he thinks gold or silver or palladium or platinum investors should know about. You can sign up for that. And whenever you sign up, you'll get the gold investors kit for free as well, right by email. Just simply go to followthemoney.com/gold. And there you will be able to sign up real quickly for that list. And you can, of course, Tom, you don't share that information with anybody, I know.
With nobody.
Yeah,
it's completely confidential. We don't share it with anybody.
That's the same way we roll here. We're very, very protective of those emails. And then let's move back to our question box here just to see. It looks like we have a few more questions. They're mainly about mining stocks. There is one more here from Samuel. Maybe this might be somewhat of a variant of the question we asked you before, Tom. To leverage the increases in metal prices, would you take a position in quality mining stocks? In other words, so whenever we know this, Tom, that whenever gold and silver physical prices go up, mining stocks certainly can go up, even more. And not always, but sometimes they can. And I want to stress your point that when you are a fundamental analyst, if you look at financial statements from companies, the mining industry is just, as you pointed out, one of the most poor fundamental stories out there. Now that certainly has changed in recent years. They've really had to clean up their act. They've tried to because they wanted to provide more transparency, and there's a lot more competition in the space. And so, but you're so right about that. If you're looking to purchase stocks, mining stocks just don't come to the top of the list whenever you're thinking about high quality companies, because mining stocks, again, they kind of are a different kind of beast. They're a different kind of breed. But in big uptrends, it's hard to argue against mining stocks because they certainly can outperform. So do you see that would be good for some people to leverage the increases in metal prices by taking positions in these quality mining stocks, assuming they can find some good quality mining stocks?
Oh, well, I definitely have clients that do that. They call it buy their physical from us, and they don't ask me my opinion. They just say they're doing it. But there's no question there's people out there leveraging it. And if you were going to do it, the only caution I'd have is just to be very careful with a low percentage of your investment money. Take a little bit and try to increase the return over the physical. I certainly understand that. And but there's those mind traps out there that you don't really think about. But the ETFs are for physical are different than the mining shares. There's not a storage fee on the mining shares.
All
so
right,
I don't have any problem with that whatsoever, as long as it's not a big percentage.
All right, we're going to take we have about two more questions we're going to try to squeeze in here. We're right at the end of our hour, so let's go ahead and squeeze these in. First of all, Wade had asked a question. Hey, Wade, great to have you here. Our good friend Wade, he says, in your opinion, what are the main differences between buying and holding physical metals and buying an ETF in those metals? And we've kind of talked about that what if you don't own it, you don't. If you don't hold it, you don't own it. So we've kind of covered that way. We probably have already kind of covered that in this call. But if you have more questions along those lines, feel free to call Tom, and he can even reiterate more on that. Last question comes from Suzanne. She heard you talk about your ETF that you could build or you could construct with physical metal that's actually backing it up. Can you just briefly explain about your storage program, Tom?
Yeah, it's not an ETF, but if they call the 800 number, we can send them the two pieces about the program that is like it's not an ETF, of course, because it's physical purchase. And then we send the metal at no cost to one of the three warehouses. One's in Toronto, one's in Wilmington, Delaware, and one's in Dallas, Texas. And the one in Dallas, Texas is a little bit more expensive than the other two. But once it gets there, then it's in their name. It's confirmed. They'll say this arrived in your name. Is this right? You get an account number. You get the first 6 months free on the storage, and then every 6 months after that, you'll be billed for the storage. So that's how it works. It's a COMEX warehouse. There's only about 9 or 10 of them in the world, and these are for two of the Dallas doesn't qualify as a COMEX warehouse because of its location, but the other two do. So we're putting in two of the highest rated insured warehouses in the world coming in through our program. It's a $10,000 minimum.
Yeah, that was my question.
You can do gold, silver, platinum, palladium. You can do any metal you want. But after that, you can add 1 ounce of gold and 100 ounces of silver anytime you want. Once you've made to get on the insurance list, you get all your metals insured. It's a $10,000 minimum first purchase.
Fantastic. Really quick comment here for those of you watching. If you're not currently a followthemoney.com member, I want to encourage you to check out our website. Go to followthemoney.com and then click on the plans and pricing, or just go to followthemoney.com/join. And you'll see we have 3 different membership plans. If you're into gold mining stocks, which many of you in this call are, or if you're into just tracking gold and silver, knowing when the uptrends begin or wanting to know when the downtrends happen, this is a fantastic service that you might want to check out. Just go to followthemoney.com. You can learn more about it. And we have a special save 25% coupon that you just type in save 25, that coupon code, whenever you get to the checkout, and you'll save 25% on your membership. Tom, it has really been an honor to have you here today. I really appreciate you being here. And I want to stress that if anyone wants to speak directly with you by phone, they can certainly do that. They can contact you at 800-247-2812. You'll see that number there on the screen. Tom, if you have any final comments or any parting wisdom, feel free.
No, I just say, Jerry, doing this 43 years, and I just feel sorry for people that don't have metals. I mean, I honestly, from the bottom of my heart, feel they're going to miss the biggest move of my career. And I'm not predicting it tomorrow, the next day, or next year, but it's going to end up not being very pretty. This fiat currency world is going to crash down. I wish I could talk about all the things I'm privy to, but I can't. But I can say to you, if you don't have metals or a percentage that you should have, I would be getting it sooner than later. And then comes another discussion on platinum, palladium, gold, silver, breaking it down. But I'd really encourage you, if you've waited, I don't believe you can wait any longer. We've already seen 15 to 20% moves in gold and silver this year. And I remember the year 2011 when it went up 92% in 1 year. And everybody kept waiting for it to go down, and it didn't turn back for years. So that's my parting thing is just get on board. And if you don't we sent out today the lowest special on half-ounce gold eagles we've ever had in 43 years. We were able to deal with a wholesaler that bought 700 of them at below market. He's letting us help us and our clients liquidate them at about 4%. 4%. I'm talking about like $30 a coin below our normal price. So you can call that number and if you need to talk to us. But that's it. I just get serious about investments. I really do think the world is not going to be the same in 2 or 3 years as it is now.
Can't agree more. We certainly are seeing a lot of economic shenanigans, the amount of debt, of course, the deficits and the denial about all of these deficits and debts is really just quite stunning. And gold stands as it has for millennia as insurance against catastrophe, and we certainly see catastrophe ahead. Thank you, Tom, for being here again. If you want to reach out to Tom,
a privilege.
Yeah, thank you, my friend. Great to have you. And if anyone has a question for Tom, feel free to reach out to him, 800-247-2812. Tom has been a solid supporter and sponsor here at followthemoney.com for many, many years. And if you call him and tell him you heard about him from Follow the Money, he'll throw in free shipping and insurance on your order. So give him a call, 800-247-2812. I hope today's Lunch and Learn session has been helpful to you. We'll be doing more of these in the future. These are free calls available to you to help educate you on different financial topics. Thank you, my friends, for being here. It's been a pleasure and an honor. We'll see you next time. God bless.